Hi, today we will start the earnings yield versus PE ratio. If you don't know about earnings yield, to know earnings yield, first we need to know what is the PE ratio. If you don't know PE ratio, the link is provided in the description. You just go through it. It's a 5 minutes video. Then you will better understood earnings yield. Earnings yield nothing but it's an inverse of PE ratio and it will be expressed as a percentage. The earnings yield range from the 1 to 100 percentage, whereas PE ratio doesn't have the range, but it will start generally from the 1. And coming to the usage, where we can use earnings yield, nothing but it is a return on investment. Suppose if I have the stock A and stock B which are in the same sector like automotive or banking, so which stock will give the good return, so I can make a I can make a decision on the earnings yield. Suppose if I take a stock A, over certain period of time it is giving return on investment as 5%, it is earnings yield. If I choose a stock B which is giving the return on investment is 10% for the same time period. If suppose I want to compare a stock with some other bonds, then this earnings yield will be helpful. Suppose if bonds is giving 6% earnings yield or return on investment on same tenure of time, I can prefer bonds than stock A. And sometimes in the stock B, the return on investment or earnings yield showing the 10%, but sometimes it will include the dividends of that company. But currently, we don't bother about any dividends or anything given by the company. We will look into the final earning on the investment. That time, this earnings yield will helpful a lot for us. And coming to the next usage, if the earnings yield low or low earnings yield which indicated that the stock price is very high, that means the investment what we made it is a overvalued or stock price is at the very high levels. If the earnings yield is high, that means the earnings per share is more or the stock value is relatively low. And here we have to note one more thing. Whenever the stock price is fluctuating, the earnings per share over the period also will fluctuate. It won't be remain also. So that is why we will compare the earnings yield over the time period in a relative manner. Next is earnings yield will determine when to buy a stocks in its cycle time, and it will, if the actual earnings yield are higher than the actual earnings, it gives an indication when to buy and when to sell the stocks. Thank you.